Welcome to All About Money on HKIBC. I'm Chloe Feng. Things move fast in the world of digital assets. Just this week, two of the world's largest cryptocurrency exchanges went through tumultuous ups and downs, triggering concern from regulators and reinforcing fears of a crypto crash. It came just days after the Hong Kong government announced that it will go all in to support the healthy development of the emerging digital assets industry. So, is it a bad move? Joining us today to discuss market landscape is Lucy Gazmararian, the founder and managing partner of Token Bay Capital. Welcome to the program, Lucy.
Thank you, Chloe.
And first, I would like to briefly talk about the recent huge news for the crypto world, which is the deal between Binance and FTX. So can you just briefly run us through what's going on there and how big a deal would it be for the industry?
So yes, there's been a lot of turmoil going on in crypto markets, and it really centers around one of the largest exchanges, so one of the top three global crypto exchanges in the world, has come into effectively a liquidity crisis. And because a rumor has started, as is typical with bank runs, the same has happened to this crypto exchange, where customers, because they hear rumors, start wanting to withdraw their assets. And there is a problem because there are not enough client assets to be withdrawn, because it seems as though client assets have been used for other purposes and haven't just been securely stored in custody. So this is really triggering something of a meltdown in crypto markets currently.
Right. And how concerned are you when it comes to, the industry's current status after, Binance walked away from the deal?
So events like this, they're not uncommon in crypto's 14-year history. We have had a number of these very large scale events where, the listed crypto prices fall sort of 80, 90%. And there's sort of a crisis of confidence in the industry, given how new the space is and how nascent the technology is. That being said, every time we have one of these crypto crashes, if you like, the industry does bounce back. And the reason why it bounces back is because the technology still holds enormous promise. And it holds promise not just for financial innovation and the future of financial markets, but many other aspects, whether it be NFTs and tokenization, and even putting sort of existing stocks, bonds, and real estate onto a blockchain. So, while this is a big event and it's definitely impacted in the short term, the feeling of builders in the space is that we will come back from this.
Right. We can talk more about the technology itself later on. But before that, I do want to know your thoughts about, the Hong Kong FinTech Week, which has just concluded last week. And you were one of the guest speakers during this event. Just tell us, what is your biggest impression from the Hong Kong FinTech Week last week? It's very important for the cryptocurrency industry as well. And what were the key messages from this event, from your point of view?
So the great result we got from Hong Kong FinTech Week, that those of us in the digital asset industry or virtual asset industry in Hong Kong have really been needing to hear, is a coordinated message from the government, from the financial regulator, that virtual assets will be supported. Now, they're going to be supported in a regulatory compliant manner and be held to very high standards, which, as we've seen from recent events in crypto markets, is actually a good thing for the industry. But we needed Hong Kong to really differentiate its stance to mainland China, which has had a less accommodating approach to digital assets. And actually, the mainland has banned crypto and crypto tokens and trading of crypto for quite a while now. That was incredibly important for the prospects for Hong Kong as a virtual assets center.
How could these new messages also help your company's growth? Can you also share with us a little bit about that as well? And do you think there will be kind of an explosive growth for this sector as well later on after this signal?
So we've seen explosive growth in crypto, but it's kind of gone unchecked. There hasn't been regulation, there hasn't been regulatory frameworks, and there really hasn't been an understanding of all the different types of tokens and crypto assets there are. So the fact that Hong Kong is now making very important moves to clarify the regulatory landscape and who needs to be held accountable to the new standards is going to drive responsible and continued growth in the region. So I invest in startups that are innovating with this new technology, whether it's digital assets, tokenization, NFTs, metaverse, the whole sort of range of associated verticals that come with this technology. And so as an investor with a focus on companies in Asia Pacific, it is important for Hong Kong to be seen and understood to be a welcoming jurisdiction for these startups, for this innovation, because it is so early in this super cycle, if you like, for crypto and blockchain technology that the innovation has to be given room to explore and experiment. And so I invest in very early stage companies. So it's definitely very welcomed that the Hong Kong government has now wants to attract talent, it wants to attract startups, and it really wants to harness this new financial innovation and technology to improve the way financial markets operate.
Right. I mean, Lucy, although this industry is kind of new compared with the traditional industries, it still existed for quite a while. And over the past years, Hong Kong government, because it have some limitations on this industry, they have the voluntary licensing regime, which limits crypto trading to only professional investors with a high threshold. And because of the government's policy ambiguity over the past years, many fintech companies, crypto companies, they have already left Hong Kong, right? And so some are arguing that this move, this new signal, are coming up a little bit too little, too late now. I'm just thinking, what is your view on this? Do you think it's too late now?
So I would say that recent events show just how forward-thinking the Hong Kong regulator has been. The Hong Kong, the SFC, the Securities and Futures Commission, they came out with regulation specific for virtual assets and virtual asset service providers back in 2018. So they have really been ahead of the curve in terms of other global regulators to keep this new technology in check. And really at the heart of it is to protect investors. And as we've seen, while the technology is very exciting and there's a great deal of promise, there are also associated risks with investing in these assets and trading these assets. So I would say they've set a very clear path from day one of how they're going to approach regulating this new asset class. And they continue to evolve in line with market. But actually, by setting the bar high, you're making startups really, they're forced to implement best practice right from day one. And as again, we've seen with recent events, that is exactly what the industry needs. So I would say Hong Kong has definitely been a trendsetter. And we're now seeing other regulators from other jurisdictions converge to the Hong Kong regulators' way of treating the asset class.
All right, Lucy. And also, you said that the regulation is very important, is almost as key. But just timing-wise, when Hong Kong is trying to loosen, its regulation to allow, for example, crypto retail trading, Singapore, our regional competitor Singapore, meanwhile, they're kind of like tightening up the rules on retail tradings. You also previously worked with many central banks and regulatory bodies to help formulate their digital asset rules. I mean, if you could ever get a chance to speak with the regulators, what kind of points or key messages you want to convey to them as well, so that we can, try to also reflect their concerns and to formulate our own responsible regime that could mitigate the risks?
So the regulators, it's been a learning journey for the regulators as well. They need to understand what these different crypto assets are, what the different features, how they're used by different participants. So all these cryptos actually are very different at the end of the day. And the main concern for regulators is which tokens are securities, or which activities that are associated with managing these cryptos fall under the remit of the SFC, and therefore under the regulatory net. And if that's the case, then the treatment of any intermediaries that are working with crypto need to be held to the same standards that apply to existing financial intermediaries that are regulated by the SFC, for example. So it has been definitely a learning journey, but in terms of retail, again, the Hong Kong government was ahead of the curve when it came to spotting the risks and putting procedures in place to protect retail investors. Now, they're loosening up, as you say, the rules, but they're doing it with a lot more knowledge and education and understanding of the different cryptos and the associated risks. And when they do, and if they do, I mean, it's not for certain they're going to allow retail to access crypto on regulated exchanges, because we're going through a public consultation to determine. Right. But if they do, they will then make sure that there are suitability tests, that retail investors understand what they are investing in. And you couldn't have those types of checks and balances when the risks were actually not clear. Now crypto has played out for a longer time. The recent magnitude of the recent events are a case in point. Proper risk disclosures can be made, and people can understand exactly what they are investing in.
Right. I'm actually glad that you mentioned about the education and understanding part. Hold that thought, Lucy. We will take a short break for now, but coming up next, we'll have more discussions on the understanding of this emerging industry and see why their development also matters to us. So don't go away.